How's it going, everybody? It is Dennis, and it's that time of the month we're going over how much we made in option and dividend income. And today, we're, of course, as always, we're starting off with the dividend income. But not only that, we're going to go ahead and go over my positions, what changes I might be making in my portfolio, and what is my outlook for next month and the rest of the year, and where my head is at currently when it comes to my portfolio. So first of all, let's go ahead and go over dividend income, option income. We'll take a look at the trades I've made, and then we'll go ahead and take a look at individual positions I have and how I'm deciding to trade them in the coming month or year. So let's go ahead and take a look. First off, of course, January income for our portfolio from dividends, with OHI coming at 0, nothing paid because this is a quarterly paying ETF. And I say this all the time in all my videos. If you are new to this channel, these starting positions like OHI, Stag, Main, they've been in my portfolio for a while. I've had them for years. So for me, there's no point of selling them. They're up a good amount. Some of them are up 30-50% because I bought them during COVID times. So these positions are just profitable, make me income on the side, and there's no point of me really selling them. So then we have Stag, which is $4.10 payment for the month of January. We're going to go ahead and, after we go through the dividends, we'll look at last month compared to last month. That's higher in the spreadsheet, so I don't want to go back and forth for that. But Main paid us $5.64. Aptly paid us $83.83. TSLY paid us $322.80. AMZY paid us $126.76. GOOY paid us $108.03. YMAX paid us $306.08, and AMDY paid us $70.12. We have a little bit better of a breakdown right here on our page for the YMAX ETF. So we have a breakdown. So that $322.80 we received from TSLY was on 450 shares that we own, and we, of course, we had the distribution of $71.70. We also had AMZY that gave us that $126.76. And that was on 316 shares that we owned at the time for $40.05, which was lower than last month. Kind of disappointing, but it's okay. We'll see how they perform next week and this coming week for the distributions. We also had Aptly, which gave us the $83.83 for our 295 shares that we own of the distribution of $28.41. We had GOOY that gave us $108.03 for our 324 shares, or 324.9993, so pretty much 325 on the distribution of $33.24. And then we had AMDY that paid us $70.12 for $34.04 of our 206 shares. And as you can see, we already received our distribution for this week of the making of this video. It's Thursday, February 6th. We have 232 shares now, $38.12, and $88.44 is how much we earned from AMD for this month of February. But also there's YMAX, which is $306.08, and of course this is the total distribution amount that we received for January. So the total distribution amount was $60.40 for 537 shares is how much we ended off at the end of January. This is not the total, this is the total amount of shares that we had at the end of January for YMAX. So 537 shares, total dividend distribution of $60.40, and that gave us $306.08. To a total, of course, of $1,017.63 just from YMAX alone. But that is down 51.76% compared to last month. And the reason being, of course, is down 51.76% is because we earned $2,109 last month. And that is because we had, of course, the high payments from ETFs such as GOOY, which had a double payment, as well as high payments. We had AMDY, which had a high payment of $42.15. We had AMZY that had a high payment of $86.19. And we had two payments from TSLY, both over $1, of total of $2.50, which gave us $1,000 in itself. So therefore, of course, we would be down 50% because last month TSLY paid us pretty much what we got this month from YMAX ETFs. Doesn't mean the strategies that I'm running is not working. And we take a look at the month prior, we earned $1,154.28. So we are down compared to the month prior to December, but we are still trending upwards. And the reason we are down is because we had that low payment from AMZY. But it's to be expected from January dividends. January usually is not that volatile. It is volatile, but the performance of stocks and ETFs in January is not that great based on historical evidence. So moving on, we looked over YMAX ETF. We could go ahead and take a look at HTGC, which did not pay us anything because again, it's a quarterly paying ETF. We have EFC that paid us $17.16. DHS that paid us $7.99. We have SCHH that did not pay us anything. RITM that paid us $57.99. And then the QDTE that paid us $230.32. JEPQ, of course, this is the new position I've added for the new year. This is the position that's going to provide me not only dividends, but as well as somewhat growth. It's not, of course, it's not going to grow as much as the QQQs. It's just what it trades on, but it'll be able to sustain a little bit of growth. Currently, for the 1 year, the past year, JEPQ was able to get around 10 to 11% growth while providing 9 to 10% dividend return. So, JEPQ, new holding that I'm putting in, hopefully continues to get that 10% growth and 10% dividend return as well. It is technically dividend growth as well, because that 10% does scale for the price of the ETF. And of course, when the ETF price goes up, so does the dividend with it if it continues to stay at 10%. So there is dividend growth depending on where you bought in. I forgot the exact terminology for that, but I guess someone in the comments could probably put it down what the terminology is for that. But before we take a look at that, the final dividend income, we can also take a look at what our weeklies paid, because I forgot to go over that. So let's go back to YMAX for a second. YMAX paid us 5 weeks. We had 5 payments for January. So we had 500 shares in the beginning of the month of January. We ended at 537. We got 18 cents, 13, pretty much 14 cents, 11 cents, 17 cents, and almost 15 cents for the 5 weeks, which gave us that 60-40 distribution. And as you can see, the performance for January was pretty poor. 90, 71, 56, 87, and 78. And of course, we were also down most of the weeks. So week over week, we were down a couple times. The only times we're actually green was on the 4th week. But that is because the performance of the 3rd week was really, really bad. So we had negative 18.89 compared to the last week of last year and last month, which is $111. And of course, the month over month was also down negative 3.33% compared to the 316 of last month, or 306 now. So yeah, poor performance in January. Quite sad on that front, but we did have at least 1 week of green, a 53.85% higher week over week. But in general, it was negative 18.89, negative 21.41, negative 19.86, and negative 9.9. And that was even with shares being added into it. Of course, we had 3 weeks of no shares being added, but then we added the 537 at the end, and still that was not able to bring us higher than the 87.63 of week 4. Also, we could take a look at Roundhill. Since we do have QDTE as well. And we can see with Roundhill, we were adding shares consecutively with, if you do not or do not know, QDTE, I do have drip enabled through QDTE because it does not work the way YMAX works. As I mentioned before, with YMAX, my strategy is to take the income I get from week A, put it into week B into week C, and week C into week D, and so on to compound quicker in a sense. But of course, with QDTE, I only own QDTE, and that's the only Roundhill ETF I own, and they don't have monthly paying ETFs that are staggered, or at least I'm not invested in them personally. So for me, I just turn on drip for QDTE, let us do its thing, as well as add a little bit of income, say I earn from options, or I have extra income from YMAX that I want to put into QDTE, or I see a buying opportunity, and I do that as well. So we have 212 in the beginning of January, 227 at the end. We were dripping in a little bit, as well as adding a couple shares on my end, and that gave us a total earnings of around $230.32, and the distributions of $1.63.5. And of course, we had 63, 39, 73, 54, and 42. And that, again, as you can see, poor performance from January. Most of the time, everything was red week over week. Only 1 week was profitable, or green was 88.51% growth week over week. And that was because week 2 was just a poor week, of having a return of 39.07. And then the next week, we had 33.65. So pretty much almost doubling of what we got in week 2 compared to week 3. And that also gave us a negative month over month growth, negative 39.79%. And you might be thinking, why is it so high? Well, that is because, of course, we had the high payments to end off the year of 2024. We had 286 and 80 cent payments from QDTE, which gave us a staggering $160 and $151. So, of course, the performance will be poor in January compared to 2024 of December. Or December of 2024. But February should stable out. You should see that February should be green month over month, assuming that the share count continues to increase, which it is increasing with drip, as well as any income that I throw in there myself. So, looking over all of that, we can take a look at what the total income was for the month from dividends. and that was $1,340.82. $1,340.82. That's down negative 47.47% from the last month over month. And we'll go ahead and take a look now at how the performance compares to last month. And last month, like I said before, we had huge payments. The reason is end of the year, people were paying out. A lot of ETFs and companies were paying out all the things they owned on taxes, and they're just paying it out to all of us and giving us all that they owed us. So last month, we got $2,552.32. As you can see, that is why we have the negative 47% growth month over month. And we had a good amount of paid out. As you guys saw, 1,000 from TSLY, 261 from AMZY, 298 from GOOY, 316 from YMAX. AMD came out low at 53.54, but that's a whole different story. We'll get into that later about my AMD position. But in general, the dividend distributions were insane. They were great when it came to YMAX ETFs and QDTE. So that is why we had the 2,552.32. Now, if we look at the month prior to that, which was this, why am I forgetting what's after December, November, or before December and November? It's $1,526.02. So $1,526.02. Where am I? There we go. So we are still off by around less than $200 compared to to November, which is technically like the stable growth period. If we didn't have the tax stuff, whatever, it doesn't matter. $1,340 is still below $200 of what we got in November of $1,500. So the performance is technically lower in January than it was in November, which is like the stable income, which is the usual income you would receive if it wasn't for tax purposes. So yeah, there's that. It is lower. Even though we got all those dividends and we reinvested them back in, it still came in lower. But what can you do? January was just a poor performance, so there's not much you could do on that front, at least from my side. I don't control the ETFs. I don't control how they trade, but what I do control is option trading, and options came in stronger than the last month and the month prior. So let's go ahead and take a look at options. So option income, we have TNA that came at $1,298, and SPY that came out at $485. And then you see SPXW, which came in at $25. You might be thinking, what is SPXW? Well, Robinhood now allows you to trade on indexes directly. So I decided to mess around with it, testing a little bit things out. Of course, decided to do a credit spread, and I did a credit spread. I think it was a put credit spread. Yes, it was a put credit spread I did on SPXW, and we'll go ahead and take a look at that on our options trading screen. So we did a put credit spread on SPXW. That earned from 6025 to 6030 for 1 day. It was a 0 DTE trade. I took it at 12 o'clock in the midday, and I took that and I made myself $25. It was pretty good. It was also on the day that the market dropped because they decided to release tariffs. They decided that tariffs were going to be a thing, and I started panicking. I was like, wow, what a day to make a trade. Tariffs were going to be put out on Canada and Mexico, but that went away the next week on Monday because this was made on Friday, and the next week it all went away. But no stress needed. But 6025, 6030 is the trade I did on the credit spread for SPXW. Earned myself $25. That's on a $500 deposit or whatever you want to call it. I put $500 up front to make $25, so not bad of a return. But besides that, we could also take a look at our other trades. So as you can see, we have a bunch of trades made for TNA. We traded TNA, SPY, all that sorts. And so we could take a look at the trades from TNA. We made $228, $120, $37. We made then $182, $93, $20. 168, 110, 340, and then of course we had SPY trades of $98, $110, $107, $30, and $140. And that of course comes out to like what we saw before in the previous screen of 100,298, 485, and 25. Now when it comes to trading the indexes, SPXW, I don't know how much I'm going to really do that. I just decided to test it out and see how it works. I'm still trying to figure out what my strategy would be if I'm trading credit spreads on SPXW. Of course, credit spreads are very risky compared to everything else that I do in my portfolio. Say is the dividend ETFs, and as well as my options trading. Options trading, as you may or may not know, I do poor man covered calls. So therefore, I buy a call, I sell a call on that. I buy a call somewhere a year or half a year out. Currently, I have a half a year out on TNA, This is my half a year out on TNA. It expires in July 18th. I have 6 contracts on that. It's currently down -7%, but that's because TNA is trending downwards, upwards. It's very volatile. I don't look at this that much. It's very volatile. That's my account. That's why my account bounces up and down all the time. It is a 3 times leverage position, so makes sense. So I have 6 contracts on that. I also have 4 contracts on a year position, which is expiring in a year. Wait, did I open the correct one? Oh wait, here's the year position. This is the year position. This one expires in January 16th of 2026. And this one is currently down -12%, but like I said, if it's volatile, it goes up and down, whatever. Whoever's purchasing or selling, there's not a lot of volume in here, so therefore it moves up and down a lot. But yeah, those are the positions that I have with TNA. 4 contracts expiring in a year, 6 contracts expiring in half a year in July. And I trade calls on that, so I currently have 10 calls open, $47 calls open, 10 of them expiring in March 7th. I've decided to switch over to monthly trading, so then, or for now at least, I go back and forth. You guys may or may know, I do weekly trading and monthly trading, depending on how I see fit. But currently I did a monthly trade to March 7th, collected myself $1,200. Of course, this is not for January, this is for February, but I'm just going over it because why not? I collected $1,200 and I'm going to take that money, but I put it straight back into YMAX and JEPQ, and that will be able to compound. Of course, JEPQ doesn't compound because it's not weekly, but YMAX will be able to compound weekly and therefore earn me weekly income to addition to what I was currently earning. So yeah, those are my option positions. Of course, we also have SPY, but SPY is simple. It's only 1 contract. It was like $8,800 for 1 contract. That expires in a year as well, but it expires in December. I decided to take a December trade. I don't know why, probably because it was cheaper, but it's a December trade, making money on that as well. As you can see, I'm currently making around the $400 to $500 mark on the poor man covered call strategy on SPY. So with SPXW, it's probably just gonna be a little fun thing that I do. Currently, I don't see fit having $500 just being traded every single day with a risk of losing it all. Because with credit spreads, unless you're able to find a way to roll it to next week, which technically with SPXW you could do because it's the S&P 500. And in most cases, the S&P should trend upwards even if you have a losing position. You can move it out a week or 2 weeks or 3 weeks or a month, assuming you could get a good spread on it and a good roll. But in generally speaking, it is safer than trading spreads on any other stock, single stock or ETFs that are not indexes. And as well, indexes have a lot of volume, so there's a lot of things you could do with that and a lot of good prices you could get on that. But in general, just a little thing I was looking at, put $500 up front, got 25 bucks out of it. Maybe I'll do it this month, maybe I'll do it next month, maybe I'll start trading spreads on indexes. That I would have to see. But of course, first I want to be able to have a stable amount of income coming in, and currently I have not achieved the amount of income I want to where I could just take $500 and throw it at fun times on the indexes. So that for now will have to be judged if it's worth it or not. So how much did I own in total? Well, you guys probably saw on the screen prior, I earned $1,808 on all my option income, and that was a 96.52% increase month over month. Like I said, my dividends might have been poor when it came to my YMAX ETFs and QDTE and all that sorts. They performed poor this month, but the trades on options came in really, really well. We got $920 worth last month of December, so negative 52.80% from the month prior, November. So we didn't beat November of 1,949, but that is because we also were trading NVDS, and Riot was our last trade on Riot. So these 2 positions were now canceled out and moved over to SPY and TNA. So let's say, I don't know, probably next month, I don't know. Actually, I don't think next month we'll be able to beat 1949. I think we're probably going to stay stable around the $1,600, $1,800 mark when it comes to our option trading now. Unless I add more contracts, then probably I'll be able to make more. But I think option trading and option income is probably going to stay stable for myself and my portfolio for a little bit, because I am taking that income and throwing into JEPQ, into YMAX, QDTE, and any other ETF I find fit. But yeah, we did beat the $920 from the month prior of December, where we only got $580 from TNA. That is because we got caught and we had to move our contracts upwards, and because of that, we were not able to capture a lot of premium. And with SPY, that did save us a little bit with $340, but of course, we were not able to hit that $400 mark, meaning we weren't able to earn $100 every single week, which is what I'm aiming for with my SPY contracts. Of course, you could earn more if you take riskier trades, and that's a whole different story, a whole different video we could talk about. But if we go ahead and take a look that leaves us with a total of $3,148.82 earned, or a negative 9.32% month over month compared to December. Of course, like mentioned before, the thing that put us down negative 9.32% is that dividend of negative 47.47 month over month. So yeah, that's the reason why we were lower. But we're still over the $3,000 mark, so I'll call that a win. If we're under $3,000, then maybe I'll be a little bit stressed, meaning that we're not only that we're not growing because we're down negative 9.32%, but also because we're not staying above 3,000. As you guys may or may not know, I want to be able to stay above 3,000 and hopefully grow and stay above 4,000. So right now we have 2 months of over 3,000. This is the 3rd month now. We're able to get a 4th month, a 5th month. That's going to be great. That means we're stable at staying above the 3,000 mark, and hopefully our reinvestments into dividends, our reinvestments into the ETFs, and maybe some other strategies or maybe more contracts will boost us up to the 4,000 mark, and hopefully we'll be able to stay stable at that as well. So that is how much we've earned for January with options and dividends. Now let's take a look at some of my positions, and let's take a look at how I am judging it and what I'm deciding to do. So, like I talked about before, AMD has been quite of a poor performer, and they've been cutting their dividends distributions. They cut it this month as well. Of course, it came in again at the 30-cent mark, but a little bit higher than the month prior. And the ETF itself has been falling in value. Year to date, it's fell 15.31%. On the 3-month, it's down 31.80%, and on the 1 year, it's down 62%. So poor performance. They've had. Honestly, they had a decent meeting for their financials, but still it came in negative. The people continue to sell. Corporate continues to sell. Or not corporate, banks continue to sell, and funds and hedge funds and all that sorts. But it's 2.6% of our portfolio. I did add a couple more shares into it. I'm pretty sure. Yep, 4 hours ago I was making this video. I added another 12 shares into it, and that is because of the dividends I received from last week. I added another 12 shares to it, 11 shares. I continue to put more and more money into it. The reason being, of course, it is going down in value. But of course, when you're buying when it's going down, you're lowering the average cost and all that sorts. But I do see a future in AMD, the underlying, and I believe that sure, this is short-term pain, negative 26.67% or negative $768.50. This might be short-term pain, and it does hurt to see the negative and negative 26% down, and the maintenance requirement is 40%, so it's way higher than 25% that YMAX and QDTE has. So it could be said that it's a poor investment, but hey, listen, it pays dividends. End of the day, even if for some reason it does not go up as much as I expected to, at least I'll receive dividends from it, right? The distribution from AMD, I'm pretty sure, is around the what? We can actually take a look at that right now. Let's do a live lookup of what the distribution of AMD is currently. If we take a look at it, AMD's distribution rate currently at its previous distribution and the price that it was at is 50%. So it's around the TSLY mark. Assuming that, you know, maybe they're not able to get, and this is while it's trending downwards as well. So technically, to think about it, 53% while trending downwards is pretty good. But okay, assuming that they stay at 50%, it continues to trend downwards, or maybe it stabilizes, who knows. I would say in 3 years it pays itself off. Is that the best case scenario? Probably not. Do I want to hold it 3 years until it pays itself off? Pays itself off? I don't know why I can't speak today. Probably not. But I still think that AMD has a future. If it continues to trend downwards, if it gets to negative 50% of what I invested in, maybe I'll pause the amount of money I'm putting into it, or half the amount of money I'm putting into it. I don't know. I have to see. There's, of course, this is the first Q1 earnings that they had of 2025. There's still 3 more to go. They could flip it around. They could change it. They have pretty good statistics or numbers. You know, they're trending upwards. They have some acquisitions that they've done with other companies. They're working together with HP, I'm pretty sure, or one of those companies, or Dell, one of those companies. So they're working with all these companies. They have their graphics card. They have AI. They're maybe a little bit behind in NVIDIA. They might not have the hype of NVIDIA, but I do think they possibly have a future. So that's why I'm playing into AMD. That's why I'm continuing to buy AMD. It's dividends. It makes me money. And hopefully if AMD goes upwards, they could capture some of that upward movement, and therefore, you know, make me a little bit of money on that side, and at least leave me, well, technically if it goes back up and I made all the dividends from all those months and maybe a year of distributions, technically if it goes back up, I have profited on all the dividends that I received. So we'll have to see how that works out, because of course, as you guys may or may not know, I take out the dividends do not get reinvested. It's not dripped back in. I take the money and then reinvest into whatever else I decide to. But second position that I want to talk about is YMAX. Year to date, it's down negative 4.32%. And on the year is down negative 19.90%, or negative $4. But of course, as you may or may not know, it pays way more than the negative $4 that it is down. My issue currently, and a lot of people's issue with YMAX, is that they've diversified, they've over-diversified. They've diversified into all these funds that they've launched. They added Carvana into it. They have the one that everybody hates. I forgot which is the one, Mara. No, not Mara. It's not Mara. It's MRNY. Everybody hates that fund. Everybody wants to get it out because it's just been going down, down, down. But how I look at it is, last year in 2024, it outpaced the S&P 500, even while it was down almost negative, like, what was it? Well, if we take a look, where was it before the new year started? It was down around negative 17%, and with its distributions and reinvestment, it was able to outpace the S&P 500 by almost 2%, I think it was. So in that case, it is a good fund to hold. As you can see, it's 11.49% of my portfolio. And also what I am looking at it for is, if I continue to add these shares and they continue to give us distributions of 20 cents and around that average, that means I'll be able to receive $100 every single week, which I'm currently receiving from the last distribution, which we saw on the graph. If we take a look at YMAX, we received $110.51. So if they're able to keep it above the 19 or 20 cent mark, we will be able to continue to receive $100 plus every single week from YMAX. And why $100 plus? Because who doesn't want $100 every single week? You could take that, put into any fund you want, reinvest it back into itself, put into some option strategies. Who knows? But of course, the more you grow, the more you make. If we get to 1,000 shares, that's now $200 a month. If you get it to 1,500, that's $300 a week. Sorry, $200 a week, $300 a week. 2,000 shares, that's $400 a week, and so on and so on and so on. So this is a position that I am looking to grow. I'm still a little bit iffy on it. Also, I'm in general iffy on YMAX ETFs. I do love their funds that they have. I continue to buy into their funds and continue to reinvest into their funds because I do see potential in them with the income generation that they have and the ability to use the funds to do whatever you want, unlike other funds that I talked about before. But in general, my lookout on YMAX ETF is I think they should slow down on the release of their new ETFs. I think they've been releasing too many ETFs and focusing on that rather than focusing on trading their actual ETFs. I think they should focus on trading, improving their strategies, improving their trades, and getting better and better at that instead of getting more funds, acquiring more traders that are maybe new to the market or old to the market, who knows. But in general, if you release new funds, you need new traders to trade those funds and manage those funds, the managers. So in general, I think they should focus on that, get us better yields, get us better returns, focus on maybe more NAV stability. I know I mention all the time, it's not about the NAV. It's 50-50, right? I'm not a person, like I mentioned before, to go into curve ETFs just like I have NAV stability. I'm not looking for that. I'm not looking for NAV stability in that sense, like curve, where they have NAV growth and just general share value growth and lower dividend distributions. I'm looking for something that gives me income, but possibly is able to have at least some NAV stability. And YMAX have not been able to provide that in some cases. Of course, it could be said that their funds that they trade are very volatile and it's hard to manage them. And you could look at a fund like AMZY, which for me currently is up $600 currently or something of that sort. I don't know what the percent is. I think it's like 2% or something like that, maybe less. But it's up $600. That's with the reinvestments of dividends and everything of that sort. So they do have some funds that are positive as well as giving your dividends. So it is possible to do so. Maybe not all of the stocks, underlying stocks can do so, but some of them and majority of them are possible to do while providing high dividends. So I think maybe they should focus in on that. Maybe change the perspective on YMAX and get some of those funds out of there. But then, they're too busy releasing QDTE and LFGY and all these different funds instead of just focusing on the funds you already own. Maybe, focusing on your own funds, the general funds you can have, and maybe You know, you guys have already billions of dollars that you trade and people are willing to invest. Maybe take those billions of dollars and use them for some good use to get us better trades. But hey, I'm not a manager. That's just my outlook on YMAX ETF. I'm going to continue to invest in him currently. Currently, I don't have any sudden changes that I want to do with my portfolio. Maybe I'm going to start a little bit, maybe moving into my own trading strategies on my own. So what I mean by that is maybe I'll start purchasing more contracts. Say be it in you know, TNA or S&P is going to be expensive to buy a contract in that. That's like $8,000. So for me to buy a contract in S&P, I would have to sell some of my positions or wait a couple months. If I'm making $3,000 a month, I would have to wait around 3 months to buy a contract in S&P, which then will give me $400 in return every single month. So I don't know if the time holding that cash and the time would be worth it. But then technically, if you think about it, what I could do is I could take the cash from the dividends and I could take the cash from the options, hold that cash, take margin on it, and then use the margin to reinvest. So that could be a possibility now that I'm thinking about it. But that's just things I'd have to play out and think about while I'm doing it. But anyways, thank you so much for watching. That is how much we've earned from dividend and option income. I've decided that with these videos, when I make monthly videos, I think I should do, rather than quick videos of like, boom, I made this much, I made this much, look at this, look at that. I decided I'll just sit down and do maybe a little bit of a longer video with you guys and be a little bit more open with my trades, with my portfolio, and in general, where my head is at. Kind of, it's like a rant video in a little bit. It's kind of like a rant video. I get to rant about my ideas and where my head is at currently with these trades. And see, like we just talking about a couple of seconds ago, maybe I could hold off on the cash, hold these $3,000 for 3 months, take some margin out on it. Could be an idea to do. So yeah, I don't know. We'll see. Maybe I'll decide to do that. Who knows? So see, sometimes you gotta talk to yourself or talk to the camera, and maybe some good ideas will pop up. But anyways, thank you so much for watching. I will see you guys next week on Wednesday to go over the distributions for AMZY, APLY, YMAX, and all of that sorts. So thank you so much for watching. Hope you guys enjoyed. Like, subscribe, support the channel. It's free. It's free to do. I don't know why people hate so much on like and subscribing. It's free. If you enjoyed the content, you might as well. Helps the algorithm. YouTube has been shitting on me recently when it comes to that aspect. So hopefully that'll help out a little bit. But thank you so much for watching. It's been Dennis. It's been me, Dennis. I don't know why I can't talk today, but see you guys next week for the Wednesday video.